pretty quiet on the Nigerian markets, it seems, with investors seeming to be sitting on the fence until the election proceedings conclude. What's your view of the markets right now, and how are you positioning yourself?
Good morning, Alishia. So far in the market, we've seen very thin trading volumes. We've seen traded volumes well below the 2 billion mark, and if you compare that to what we saw in the first quarter of the year, this is a far cry. We saw traded volumes well above 350 million units, but at the moment we're seeing very thin volumes without trades in Transcore. Well, at the moment, I think investors are adopting a wait-and-see approach. They're waiting to see how the elections will play out. The first leg of the elections was last week, which went well. We're going to do the presidential elections this weekend, and probably after that we may see some of the foreign investors return to the market. But at the moment, we expect the market to continue to trade with marginal gains.
Is now possibly not the time, Kingsley, to be delving in here? Because while we've got these uncertainties about in the political arena, it's subsided to a large extent, and we have quite a few positives simultaneously at play. We've got the creation of the Sovereign Wealth Fund, AMCON's completion of loan purchases, banks' M&A activity underway, and the extension of trading hours at the NSE, along with the new appointment at the CEO. And many saying that on the back of that, we could well be seeing a second quarter that could ignite some kind of rally.
Well, so far the banks that released results, majority of them were impressive, but they failed to excite the market. I think the market is really bogged down with the macro picture. We've seen the currency slide so far, and the currency has lost about 4 to 5% this year. And for the foreign investors, they're a bit skeptical because they don't want to be losing money on the currency. And even if the market at the moment, valuations appear very cheap, we're seeing quite a number of banks trade below their book value. And one wants to ask, what's the justification for such trading when we're seeing some of these banks with significant prospects of strong return on equities, well above their cost of equities. So I think the market is probably overpricing the risks. Personally, I think the elections is going to go well, and after that we'll probably see increased activities in the market. But at the moment, investors are just adopting a wait-and-see approach.
Many saying that a lot of the depressed activity or the selling we've seen in equities over the last couple of months is hinging on the fact that attention has shifted over to the fixed income space and the money markets as rates were raised on that end, especially the attention of fund managers. To what extent are you seeing a shift in asset allocation right now?
I think at the moment that's kind of exaggerated. Although we've seen bond yields spike since the raise of the MPR about 3 weeks ago. But I think that this is probably the best time to take position in equities, especially the banks. We were hoping that the full year results from banks were going to turn around the market, even though we saw dividend yields in excess of 5–6%. But that failed to excite the market. The yields we're seeing in the money market are pretty strong, but the question is whether these yields are sustainable at these levels. We don't expect yields to continue to rise at the rate it's doing at the moment. And probably after the elections, we may see bond yields beginning to trend downwards when investors are taking positions in the bond market.
Kingsley, just looking at that banking sector, are you drawing quite a stark distinction when it comes to the rescued players versus some of the safer banks?
Well, for the cleared banks, I think the picture is much straightforward. We know what they've done in 2010, and we have reasonable expectations for their performance in 2011. We saw very impressive results from Access Bank and as well as FCMB and even Sky Bank. I think if these banks can sustain this tempo of growth, we probably see them grow their bottom line between 20 to 30% in 2011. And at such growth levels, I don't think the current valuations for these banks are ripe. I probably see between 20 to 30% upside in the banking sector. Well, for the rescued banks, at the moment, it's pretty unclear to take positions in these banks. We've not seen what they've done in 2010. Yeah, though AMCON has acquired their NPLs, but beyond this, we don't, apart from those that have signed MOUs, we don't really know the prospects of these banks for 2011. So for the moment, I'm just sticking to the cleared banks, and I think quite a number of them are going to outperform in 2011.